Hey, this is Mike Swanson of Wall Street Window. I want to take a look today during a tremendous market rally day on what people are doing on Robinhood. Look, this is a huge day. The Federal Reserve met yesterday. The Nasdaq powered through. Just last week, we saw the S&P 500 close above not only its 200-day moving average, but the downtrend resistance line that had connected all the previous highs going back to January 2022. And look, today, I think, is undeniably shows us that we are now in a cyclical bull market. And I'm someone you should listen to when I say that, because I'm not someone that just does these YouTube videos that are there to hype you up and tell you what you want to know in order to get the algorithm to give me new views. I'm somebody that was bearish all the way down during 2022 because I warned in 2021 that a giant correction or a bear market was coming because the internals of the market turned down, and then they turned up in October when we saw gold explode into a cyclical bull market. We saw Europe and emerging markets explode higher in December, smash through their downtrend lines, smash through their 200-day moving averages. The stock market was lagging, and now the stock market has followed suit. And I think today everyone knows what's going on. We were prepared. We were ready. And I'm here to tell you what's really happening and being objective about things. And that's why I might have some bad news for Robinhood people, because I have not loaded up my Robinhood app or account for months. I don't really use it. It's dormant. In fact, I'm going to deactivate it after this video. I took all the money out of it a long time ago. I only opened it up to see what it was like and to track what other people are doing, because it has this page here, which shows the 100 most owned individual stock and exchange traded fund positions by Robinhood traders. So more people own Tesla than any other thing, than Apple, than Amazon, than Ford, than AMC, than Sundial, and so forth. Now, what is interesting to me is I used to follow this list, and you'd see movement up and down the list. Things come and go, a lot of changes. And that's really slowed down that process of changes in this list. And I haven't looked at this list in a couple months, not since the market turned around months ago and we've had this big rally. And I've been doing videos talking about the leadership sectors on that rally and even the individual stocks. You look at the Nasdaq, NVDA is the stock exploding up, breaking out of way above its 200-day moving average. Yes, today is a rally of where you see a lot of things up. And I know people, these Robinhood accounts, they can load up and be happy to see AMC up 12%, to see Sundial up 3%, Neo's not up, Meta up 25, Lucid up, and so forth. But the problem with the list is everything is up today, but a lot of things aren't going to go up in a sustainable way. And a lot of things just completely crashed, and they're up a huge percentage because they fell so much. That's a story of so many crypto coins. That's the story of the ARK ETF, for example. Carnival stock did that. The Robinhood Market stock did that. Nokia did that. Tilray Brands did that. Canopy Growth is a $3 stock now. Virgin Galactic, $6. Fuel Cell Energy is only a $4 stock. 40-cent move is 10% now. So what I see when I look at this list is very little change. This tells me that Robinhood people have been dormant on this rally because they have not been moving their money into the stocks, into the sectors that have been leading the rally. They have basically been sitting there frozen. Either they lost so much money that they're just too scared to do anything new, or they've been out of the game. So what I see is people that have been holding, not buying the new things in this market that are really powering up this rally. So really a lot of probably dormant accounts. And my account, my Robinhood account, has been dormant itself. That's why I'm deactivating it. I don't want to get brokerage statements from them anymore. I don't want to get tax forms from them anymore. I've got money elsewhere, much more. This is, I don't know why people use them anymore. You get free trading elsewhere. There's much more provided elsewhere. They don't really have any appeal. It was a fad, is what I think. But obviously, the Robinhood people, they're just kind of, I think, but what I see, a lot of bad stocks, frankly, on this list. Stocks that were big winners in 2021 and completely crashed. Riot platforms, is that something anyone should be buying just because it's up today? No, not when there's real companies that are soaring, paying big dividends, that aren't speculative, that have stable earnings or earnings growing. They're not Shopify. They're not Energy Transfer. They're not, RITHM Capital. They're not Zoom, and so forth. So, okay, Snap is on the list. Is Snap a stock you should buy? Let's take a look at the chart, and I'll show you why I think not. Here's the Nasdaq. The Nasdaq is soaring, up over 3% today, and you can see above the turn-day moving average. It is launched, and that launch happened after the launches already happened in other markets around the world, but they told us, we watched that, we knew that the fuel was being loaded up for the launch we now have in the Nasdaq, and that's good to know. You got to understand, you're in a global financial system. There's more to the markets than just the Nasdaq, and you watch what's going on everywhere else to understand how everything's integrated and what how we knew that this rally was going to be different than all the rallies of the past 12 months, because this was not a mere bear market rally fueled by short covering and silliness, but the start of something real. And the Fed showed us the fundamental reason why yesterday, because it's approaching the end of this interest rate hiking cycle. The Fed is going to raise rates one more time and then give up its fight against inflation. And that's why the stock markets around the world are doing what they're doing this year. This is not 2022, but it is also actually not 2020 or 2021. And that fact is what the Robinhood players are not realizing. They're in the past plays. Still, they need to get in the new plays. And I'll show you in a few minutes what some of those new plays are. But understand this. When we load up a chart of Snap, what we see is something up 10%. Woo! That's a big daily gain, but it's not even above the turn-day moving average, not even above the November high, not even above the September high. And the indicator on the bottom, which is a relative strength indicator comparing the action of Snap with the S&P 500, is completely flatlined. What does this mean? This relative strength indicator tells us whether something is outperforming or underperforming S&P 500. When it's going up, it's underperforming. When it's going flat, it's just dead. You might as well buy the S&P 500, because things that lag the S&P 500 and the S&P 500 pull back, they crash. And then when the S&P 500 rallies, they don't go up as much. They are dead money positions, not to be a part of. So NVDA is something that has now come alive. It's been outperforming the market since October. And those are the type of plays you want to be in. And so is real estate. The REIT sector has been outperforming since November, and REIT stocks pay great dividends. Inside the Nasdaq, it's semiconductors. That's what NVIDIA is. It's doing so well. So it's a fascinating time that we're in. But to show you, I've talked about the EWG ETF that I own. It's been outperforming the market since October. It's the ETF for Germany. You can see it broke out in November and then made a, then paused and then broke out again in January. You can see how it's been going up ahead of the breakout that we're now having in the Nasdaq. This broke out almost 2 months ago now. The U.S. was fueling while breakouts are happening all over the world. And that's why we were able to sit here and not be scared, when the Dow fell 600 points in a day the other week, and people are saying, oh, the trend line is going to crash it. No, it did not, because this is just the Nasdaq is one, and S&P are just two indexes in a global financial system. So let me show you something else that's I use to track what's going on in the markets. This is TC2000, and this is the sectors up the most today. So internet content information, electronics, computing, specialty finance, which tend to be stocks paying big, beefy dividends. You want something you can hold and not day trade. Look at the specialty finance sector, industrials, auto truck dealers, advertising agencies coming alive, recreational vehicles. The airline sector is coming alive. I own Southwest Airlines myself. REITs are coming alive. And as I said, that's part of the RWR ETF. Software applications, shipping stocks, home improvement stocks, trucking completely exploded yesterday, going up more. Construction stocks are on fire. So while you see the those big moves off of the low with a lot of those bad stocks that Robinhood people own, these are sectors above the 200-day moving average. They're not just bouncing off a bottom, but they are continuing a rally, which they've been outperforming the market's averages in. So leisure stocks, home furnishing stocks are coming alive. Look at what the stock of Lowe's is doing. Lowe's is above its November high, its December high, now testing its August high. And it's a real company. You can go in Lowe's and buy something and hold it in your hand. You can't do that with crypto. You can't do that with Snap. This is real and it pays a dividend. Get involved in the real stocks of real companies and that you can do things and see with your own eyes. That's what's coming alive on this rally, and I think is going to continue to do well the rest of the year. Unfortunately, those aren't the plays that Robinhood people have. Why am I talking about the Robinhood people? To try to get them to understand that this is a different year and a different time than it was when they first started with the app. When they first started with the app, they could load it up and they could see all these things that other people in the app are buying and then buy them. And then it would work out until it stopped working out a year and a half ago. And then they had lost money along with everyone else. You can no longer just load up Robinhood and do what everyone else is doing on that and expect to do well. It hasn't worked in the past over almost 2 years now. It's not going to work going forward because a lot of the stocks are still garbage. You've got to get away from the app. That's why I'm deactivating my app today and load up, get TC2000. Get it. Freestockcharts.com, I think. Warden.com is the company. You can get it there. I think Free Stocks is a free trial version. Get that. And then you can see what's outperforming the market. You can see the sector's poised to not just be a day trade, but go up in a steady Eddie way and pay you dividends while they do it. That's where the money's going to be made this year. And when the Fed stops raising rates, so we probably only got 1/4 rate hike to go, then what happens is stocks that pay good dividends tend to attract more money because people want to get the dividends and the share appreciation. That's where we're at. When interest rates are zero, then a stock can pay nothing on dividends and do well. And people want to speculate more because they can't get nothing out of their CDs or the bank. That's not where we're at anymore. And that's why fundamentals and companies that have real earnings now matter more than ever. And it's going to matter going forward. Yes, it's exciting to see a day in which just about everything goes up, but I want you to get involved in things that are more stable than just flash in the pan situations. Don't buy Snap just because it's one of the most owned stocks among other Robinhood traders. Other Robinhood traders have done crap in this market. Don't be like them. Escape the app. Think for yourself. Get involved in the markets in a serious, professional way, not a gambling way, which is what that app encourages you to do. It's designed to look exactly like a sports betting app, for goodness sake. Cut it off, deactivate it, open up a real brokerage account, get software like TC2000, use it with me, follow along what I'm doing. Let's charge forward in these markets and make this the year, not where you just make money, but learn how to do this in a sustainable way and be a winner in these markets, not just following people on this crazy app or on Reddit message boards. So that's what we're going to hopefully do together this year. If you're just watching me for the first time and you click the video because it said Robinhood, well, look, subscribe and then hit the bell, and then YouTube will send you an alert as soon as my next video is up, and I'll be talking with you later.